Good day, everyone. We have the central banks that are starting to suggest a tightening stance with interest rates. The Bank of England has been at a record low 0.25%. So a move higher would be symbolic of the belief that these banks have room to hike. And that's due to the idea, spurious notion perhaps, that economies may be on the mend. That idea remains in question, not just abroad, but also here in the U.S. Even Janet Yellen, at her recent testimony, expressed concern about lagging productivity growth. And we pointed out that the slowing GDP issue is still an issue. It's not yet to be resolved, even though it was revised slightly higher just recently. The whole sovereign debt crisis has mired the world in debt, massive amounts of debt, and that's produced record historic lows in interest rates going back. You can go back hundreds of years actually and look at a really long-term chart of interest rates, and you'll see that the world's never been at this level. Interest rates never been this low as an aggregate, despite the 4 rate hikes that the Fed has done. It still has very little fuel in its interest rate tank. And the issue at hand really is whether reducing the total amount of QE, which we pointed out has been at record levels, whether that can induce a soft landing. Now, history suggests otherwise. The first hurdle is whether the global economy can recover, even though several years of QE-induced money printing has yet to yield convincing economic strength. And the second hurdle is whether the tightening as the Fed is trying to reduce its massively bloated balance sheets, whether that can be done gradually but fast enough to be meaningful, especially in the face of what is still a very fragile global economy, and I would say at home and abroad. And that is, once again, despite years and years of money printing, which have really gone nowhere, it could be argued. The downside has been minimal this year by sharp contrast. We pointed out that the NASDAQ and the S&P have corrected a paltry few percent, that's it, this year. That's you can compare that to any other year since QE began. That this year is the year of QE fumes more so than ever. The upside has been muted as the market since March has been just baby stepping higher, and we're not really getting meaningful moves in either direction that follow through. You get these one-day jerks to the upside or downside, and then that's kind of it. And recently we're seeing higher volume on days that the market closes lower, while volume is lighter when the market rebounds. And so, in other words, the number of distribution days has been on the increase, and I think on the NASDAQ we're at 5. So it could be observed that this rally that began after the presidential election in November is sputtering out. And we also point out that the whole, the tech sector is, there's been notable damage done. It's the first time all the FANG stocks were trading at some point yesterday below their respective 50-day moving averages. And so there's a lot of carnage out there, and you have to be very quick on the trigger. If you look at some of these patterns, there's just a lot of noise. Like, just pull up anything, you'll see that there's up, down, Google, for instance, just it's a lot of noise in these patterns. Something like Facebook, same thing. It's, you get these wide ranging days that don't persist in either direction. Momo is another one that looks pretty noisy in the pattern. So of course that makes for an extremely challenging environment, and it's arguably, I remember some major media accounts in 2015 said that was the toughest year in 78 years, which I would agree, but it's only gotten more challenging since 2015. I would say that because the markets can't seem to move meaningfully in either direction, especially since March of this year, that means your profit opportunities are compressed. But that doesn't mean that we haven't been able to make progress in terms of individual names. Undercutting rally formations and voodoo setups, pocket pivots where the stock is coming back up through a 50-day, so they're not extended. Or you can take a viable gap up pocket pivot situation where the stock then retraces on lower constructive volume that allows you a very low risk entry point. So we've been, we continue to do that. These formulas seem to work even in these constricted environments. As far as the names on the list, of course, there will be potential opportunities, especially if this market starts to head higher once again in baby step fashion. We all know what it did after the impeachment allegations. I think that was on May 17th, and sure enough, on the NASDAQ, on the S&P, there was no downside follow through. These indices just started to tiptoe higher from there. And that's been the rhythm of this year, which is pretty much unprecedented. I mean, I've gone through these charts. You can go back decades worth of this data, and I can't find a similar situation. But then there was never this much depth. There was never this much QE flowing in the system as there is today. So that accounts for the inability for markets to make meaningful corrections, and it also accounts for markets to be kind of reluctant to want to really lunge forward and establish any meaningful uptrends.
Hey, Dr. K, can I interject real quick? I'm
pretty much done. We can just start talking about.
I just wanted to point out that on my Twitter page, I got people talking about, they're asking me, didn't financials and something else lead during 2000, and didn't blah, blah, blah in 1998 or 1987 and 2008, and everybody wants to compare the market to all of these past periods. And as you were pointing out, you're looking at this thing and you're seeing like, WTF, what is all this going on, right?
Exactly.
Yeah, and so it's like I said to somebody, it's like, well, this is not like any of those years. It's uniquely exactly like, I might add, 2017. And you can't assess this market on the basis of what things look like in the past, because I find, Dr. K, that if you see certain technical action one day in the past, that technical action, that price volume action was indicative of what was to come, and the next day or the day after, the exact opposite occurs just out of the blue, and it makes this almost a crazy environment. I think that's why these contrarian ugly duckling patterns, voodoo pullbacks, undercutting rallies, white copy and retest, blah blah blah, work very well as entry points, and you can often pick up some decent gains on some of these types of trades, because again, the contrarian thing comes into play because at the time everybody is bearish, and right now I think a lot of people are getting bearish because of the action over the last few days, which, as you were pointing out, that looks like garbage. I mean, all these, how many distribution days are you counting now in the NASDAQ?
There's 5 right now.
Yeah, 5.
Which, by the way, that's usually the the point of the return.
Yeah, and
where
so
you should be getting a correction of some magnitude, especially given the patterns that have been set up. But QE distorts the whole picture.
yeah, and so what happens? And the only way to make money is you got to think like an algo. Use some of the broader methods, the OWL methods. By the way, you can put a TM behind the OWLL, because I think we're trademarking it. Oh my God! There's my trailing stop on AAOOI going off. So kiss that one off. But that was good off the 50-day line. Look at that thing. That had a nice move. It said AAOI. Sorry, I said AAOO. I don't know what I'm saying. But it's running into the 20-day line, so maybe it's going to flip out. I don't know. But anyways, I think that's why the contrarian thing works. And we'll see. I think you also have to be pretty nimble, because if you think you're going to, and you were pointing this out yesterday, Dr. K, is that you buy a leading stock. Whoops, I don't know what I just did there. I wanted my pen. Okay. You buy a leading stock, and this has a Bible gap up, and it just kind of trucks higher. You know, what would you call it? Baby stepping higher? Yeah.
With a stock like Netflix, I mean, it's a leading stock, and it's not moving like it used to. If you look at prior patterns, it had more acceleration in the
Right.
pattern. In 2015, it was pretty clean, and it went from 70. It was almost a double. It almost doubled in a matter of 6 weeks. Now today, contrast that to today, it's like a soggy blanket. You know, it's a wet towel that it's very reluctant, pushing on a string.
Yeah, well, you
Basically.
have all of this work it does on the way up, and in 2 days it's gone. Boom, just like that. And, you know, so if you think you're a long-term holder of stocks, you know, and you're going to sit through everything, well, I have fun. I mean, for my money, something starts to break the 10-day line when it's been up like that, I'm gone. And I came and tried to play this once here at the 20-day line on an undercutting rally type of Louis type move. Let me clean this up. And as soon as it broke, you know, I bought into this on, that would have been what, Monday? Yeah, and as soon as it broke on Tuesday, I'm gone. Goodbye. Now we're along these lows. Maybe now it'll bounce. So maybe you'll get some tradable bounces in some of these names at this point. You certainly got one in double AOI, Applied Optoelectronics, but that's what happens, you know, and so, you know, people, I don't know, want to sit with stocks, go ahead, because even if you think that something's going to have a long-term move, you can always re-enter after a pullback. And when you have a bunch of cash in your pocket and you're using ugly duckling setups, I think it's much easier to hang with stocks because you never know when this thing is going to top, and we get another August 2015 where the market's just getting destroyed. And if you're long anything, you're getting destroyed. And you don't know if at that point we're going into a bear market. So, you know, you've got to guard against all that in real time. And I find the best way to handle this market is you can buy this and it trundles higher, but you may be selling into upside moves, maybe buying back in here and then buying back in here, and then eventually using the 10-day or the 20-day as your final stop once you get some cushion in there. But other than that, yeah, I don't know how people sit with stocks. I think mainly because they have to. And if you've been dumb and long in some cases, that's worked. But you will be dumb and long when the market finally tops and gets destroyed because if you recall, Dr. K, back in 2000 when the market topped in March, internally we were all out, you know. And Dr. K and I had just finished out number 1 and number 2 that year managing money for the firm. And in fact, as I know it, Dr. K, you posted the largest one-year return for an internal portfolio manager in 1999 in the firm's entire history. I think I'm number 2. So, you know, we were fat and happy, but we didn't get carried away with that. We sold into the March climax, but we knew, remember all the institutional clients we knew that we used to advise, like, what was that guy, Professor Jim, who was running a hedge fund, and a few others, and Aaron over at Archery, and all these guys, they all sat with their stocks, and they got
Right. Well, I remember telling Aaron later in 2000 he said he can't sell. I said, well, you know what? Why don't you sell half your positions? Just sell 50%, because then if you're wrong, at least then you only take 50% haircut. You know, your losses are cut in half. And of course, we all know what the markets did later that year. So he ended up sending me a case of Dom Perignon, thanking me for the advice. He still lost a lot, but he lost half of what he normally would have.
He sent you a case too. He sent me a case of Dom Perignon also, because I think I told him after the top, I think maybe when we went in to see him, I think that was in June of 2000, and I said to him, the Nasdaq's going to 5,000, or was that 2,500? It got cut in half, whatever it was. And when that happened, I ended up getting a case of Dom Perignon. Now, if you did get a case of Dom Perignon, Dr. K, you should have notified compliance, because you're not supposed to accept gifts greater than $100. So what I had to do with 12 bottles of Dom Perignon is pass them around the office, which everybody appreciated. But and you want to know something really funny? I actually still have one bottle, which would make it, what, 17 years old?
Yeah, I've got a couple bottles left over in my.
But I don't think it's any good anymore. Anyways,
No, it is. It ages. That's the beauty of gum. This stuff will age for 30 years.
Memories. Okay, let's get back to the task at hand here, which is, okay, what the hell do we do? Well, yesterday was a great day to be short, and I was happy to do it. I was long the UVXY. Some of you follow me on Twitter. I traded on a short-term basis using the 620 chart, and the basic idea that I try to implement with this is I want to take a massive position at an inflection point. So let me just go through this real quick, and this is something you guys, if you're into it, you can do it yourself, you know. But using the 620, which is something that I initially came up with, and Dr. K has refined a little bit, and take it from there. And it works as a great tool. But you can see yesterday, market opens about right here. And what I'm noticing at the time is you're getting across here and across here. So I was actually buying it in the pre-open at 902. And it never really looked back after that. So I got to keep an eye on my stocks here. They seem to be doing okay. I like Nutanix here. I'll get into that one later. So that's a buy signal, and it never violated. But the whole way up, you can see though it goes parabolic there. Whenever you see that in the UVXY, you're on a short-term basis, you're best off taking the profits. The other thing you'll see is you get a MACD stretch where the 6-period line gets away from the 20-period line. So I'll sell into that. And I think I got out, I was checking my average cost, about 11:30. I sold everything. I started selling in here and here. And then finally, when it couldn't hold the 6-period line, I'm gone with the rest of it. And it just kept coming in. So now this morning I come in, and I'm actually out of it right now. I sold into the, so this morning I come in, and what I'm noticing here is early in the morning, I get up here, like right here. Whoops. Like 4:30, 4:45, somewhere in here. I'm up, and I notice it's trading down around 940. And I had bought a little bit when it was down here yesterday and after hours, and then it's turning. You get a buy signal here, and but I'm already in. I bought a bunch right in here at about 946 and added to what I had. So I had about an average cost of 950. It does a little bit of flipping around. Now, keep in mind, it's only 20 cents, so it's not like, if I'm running a medium-sized position, it's not like it's going to chop me up. And then I notice a turn here, and right in here you get in real heavy, and it runs up real quick. It's up to 1020, 1040, and notice here you get the MACD stretch, where the 6-period line gets way ahead of the 20-period line. You sell into that, and now it's kind of flopping back to the downside. What I've noticed is that the UVXY is very tradable on a short-term basis if you're using the 620 chart and you're also watching what's going on in the market. In other words, the contextual backdrop of what's going on in the market that day. And this changes from day to day. And so my whole objective is I want to try to catch an inflection point, so contrarian sort of approach, and I want to do it when maybe the market's starting to get in trouble, and I'm noticing leading stocks getting hit, and I want to go in heavy, and then when I get a big jack like that, I'm going to sell into it, and I'll make. Yesterday I picked up a 28% gain in that position, and I went in very heavy. I think I had close to a 40% position in that turkey. So I had a very good day yesterday, but I also know in this market when I have a very good day on the short side, it's probably not going to last too long, at least not on a short-term basis, and they can whip everything in my face long enough to get me to cover. So if I'm not proactive and covering or selling the UVXY and covering my shorts into a parabolic move proactively, when they rip it back the other way like this, you know, I don't want to be left holding the bag. So you can't get greedy with this thing. You get a nice chop on it to the upside. Well, you know, if you're buying it in here, you got to set your stop maybe 10, 20 cents lower at these levels. So that's 1 or 2%. And that's how I'll trade it. And so far it's working pretty well, mainly because I think you can put together the contextual action of the market that day, which is very short term, and you can put it together with the action you're seeing on the 620 chart and come to some conclusions about where you can enter at low risk, heavy, looking for an inflection point, but being ready to bail if it doesn't work, and then hopefully scoring some profits, especially when you see a nice pullback like we got over the last couple of days. But now I think the market's in sort of a nether world or no man's land. If you look at this, okay, that looks like garbage. I understand. I can see the chart. I don't know why this thing doesn't want to get bigger for me. Here we go. But you're basically hanging now along the lows of a range, okay? So you got, it's about a 1 month range. It's choppy, so it looks sloppy and it looks scary and it looks like it's ready to blow apart. And a lot of stocks look the same way. So if you look at, say, a Netflix hovering around its lows, if we look at a Facebook, whoops, hanging along the lows of this sort of choppy range, Netflix getting chopped around, hanging along the lows there, right on top of this base here. So you can see it's right on top. So, you know, that is a logical place for it to rally from. So it could rally. I'm not going to discount that possibility, especially when everybody thinks that they want to short it. And it could still turn into a Louis. You don't know. Because right now, all we know for sure is that you did have this sort of bear pennant, and it looked like a Louis that was going to form out and head to turn, the L turns into a U. Yeah, Matt, thanks for the advice on the champagne, but that's why it's getting tossed out. Somebody told me it's champagne isn't like wine. You can't keep it. It goes bad after just a few years.
Depends on the year, or depends on the, like Cristal and Dom tend to last a long time compared to the others, which is why they're so,
I'm going to guess this one doesn't. Well, we'll see. Anyways, where was I?
Yeah, go ahead. We can talk about this later. I was just going to say, because I did open a bottle 3 years ago, and it was fantastic. It had aged beautifully. So,
okay.
Anyway.
Well, maybe it does then. I don't know. I'll have to check it out. But you know what? I'm not really a champagne fan. Just give me vodka. I want jet fuel. That's all I need. Anyways, okay. So again, all these stocks. Look at Apple. Okay, Apple looks like garbage, and of course it's an L pattern, and it's a bear flag, and it looks terrible. And it did kind of form this pennant just like Netflix, and it broke. If you draw a line here, it broke through it. So, but it hasn't broken to lows, and it's sitting on top of this structure. Okay, so that's where you're at. And I look at that objectively, and can I get wildly bearish here? No, the time to really get wildly bearish was either here or here. So, you know, in any of these stocks, I think. So you have to kind of watch this. I think some opportunities will crop up if you're alert to them. So that said, I think I'm going to take a non-bearish, a non-bullish position here, and I'm just going to look at my setups objectively, and I'm not going to let myself be freaked out by what's going on in the market or the commentary on TV or wherever that, oh my God, the rally's under pressure, this, that, and the other thing. Just watch the setups with a contrarian eye, but also with the idea that if you do take a position in something, so for example, speaking from my own experience, I tested the Netflix here, okay? And as soon as it gets above the 50-day line, I'm a buyer. And it runs up for me a few bucks. And then I actually sold most of it in here, then pulled in, I tried buying it back in here, and then it busted, I'm gone. So I don't even know if I made any money net on the position. But I tried it, and the beauty of an undercut and rally, or also remember we have the moving average undercut and rally, where we have seen stocks break below moving average like the 50-day line, and then as soon as they clear it and hold, they head back to the upside. So you can buy that just as soon as it comes above the 50-day moving average. We've done that with Tesla earlier in the year, you guys might remember, and I think we put it on, let me just pull this up real quick. Yeah, here is it where you had a moving average undercut and rally right here. It undercut the moving average and didn't, I guess it closed underneath here and then went lower, so it violated it. And a lot of times the moving average undercut and rally will occur on a violation, another way that the market loves to throw you for a freaking loop. So you can buy it as soon as it comes up above. It has a retest, but it doesn't really violate. It holds and turns and goes back up. And let's say if you got scared out, because let's look at this in detail. Because everybody knows, you know, you're dealing with things in real time, and to just kind of look backwards and say, oh, that would have been easy to handle. Well, here's the thing, is that on this particular day, okay, here's your moving average undercut and retest. You violate it here, and then you turn back up. So you buy right there. It runs up, it pulls back. The volume's heavy. Okay, now let's say you did get shaken out there, but if you bought close to the 50-day line, then your loss should be minimal. Okay, but if you see it now, you've sold it, and maybe you see it turn around and it goes back through there. Now it might be a difference of 2%, 1 or 2%, but if you allow that to figure into your thinking rather than where you have to think where you bought the stock before doesn't matter. Okay, what matters is where the stock goes from the time you buy it. End of story. Okay, I don't care if I buy a stock 2 or 3 or 4 points higher if I think by buying it there it's going to be going up another 20, 30. Fast maybe, and that's what Tesla did. So you wanted to be able to get back on this thing to catch this move. And if you didn't, you would have missed it, and you'd be sitting there with your finger up your you-know-what, trying to figure out what to do. But you have to be a little bit persistent. You also have to be willing to take quick action defensively, but at the same time, understand that if it does turn and set up on you, which this market loves to do, you come back after it. And you might be buying it another $2-3 higher. I don't know how many times I've heard, well, I can't buy that back. It's 3 points above where I bought it. Well, that's not what really matters, because the market doesn't give a poop about who you are and where you bought a stock. If it's heading higher from a price of 260 up to 310 or 320 very fast, you want to be in it at 260. If you bought it at 250 and you got shaken out, it doesn't matter. So, that's live and learn, and don't pay attention to the price points. So somebody says, drink Dom Perignon within 30 years. Need help? I don't know. I don't like champagne. I don't get excited by Dom Perignon. I get excited by vodka, and I like Monopolova because it's the best vodka I've tasted in a long time, and it's only $12.99 for a liter, so it's like less than half the price of Chopin or Belvedere or any of those trendy ones. So I'm not into labels. I'm just a street kid who likes jet fuel. Anyways, okay, where were we? So I'm going to tell you guys what I'm doing today. I'm actually short First Solar. Okay, maybe I'm wrong. It's kind of hanging up there. But these solar stocks all had a big move as soon as Donald Trump was babbling about putting solar panels on the border wall. And there's a number of articles on it. And I think if you think about it in terms of how much wattage is going to be produced, the cost of putting the solar panels on, the payback period, in other words, it would take more than 3 terms as president before a wall producing solar electricity would pay for itself. So before it's ever going to pay for the wall, it's going to take it 12 years before the solar part pays for itself, okay? And on top of that, you're barely putting a dent. Once it does pay for itself, you're barely putting a dent into the total cost of said wall. So to me, the thing's a bunch of BS. Now, if we assume that solar stocks are rallying solely on that basis, then these might become short. So actually every day it opens up and goes up to like 40, 50, I short it. It goes back down below 40 and I've covered on the 620 and it doesn't go anywhere. So right now I did the same thing again today and it's 39.90. I have half of my position. I covered the other half. And it's kind of hanging tight, volume's declining. So I don't know, it doesn't look necessarily like it wants to break. So I could be wrong. Maybe the move is not based on the wall news, but it started moving and at that point, and before that they were looking like garbage, all of these. And you can look at SunPower, same thing. It's doing it, but notice how they're hanging up. Now Solar Edge, this might be something to look at because it's pulling in to the 20-day line here and the volume's drawing up. So that looks like it could be viable. I'm not long that though. I'm short First Solar, and I may not stay it today, but I may come back and work this. I mean, my guess is there will be some big article, or Trump will say, oh, I guess we can't put solar cells, or someone will say something once they figure out it doesn't really make any sense, and these things will gap down in the morning one day. So I don't know. We'll see if I hold a little bit. I've been holding a small position in First Solar overnight, but all that happens is it opens up a little bit and I quadruple it or something like that and it comes in a little bit. No, not a big deal. But a couple of things to look at. The goose had a pocket pivot. I think we talked about this actually when it was voodooing right here. We put that out in a voodoo report. You had a nice move. And then these guys went and issued a $12.5 million secondary right here. I was actually buying the stock. See the voodoo pull back into the 10-day line. It looks perfect, right? Well, not if the company announces a $12.5 million or 12.5 million share secondary offering. They open it down here, and it's below the entry here, so I got out quickly, and they priced the thing at $20.75, I believe, which would have been right about here. And it's heading lower, but notice it's getting to the 50-day and it's filling this gap. So guess what? It gets close to 1943, which is the high right here, which would be the windowsill of the rising window. That's a window right there. I don't know if you guys can figure that out, but that's what that is. And you buy it there, and that's your stop. So I'm long the goose at just above 1943, and we're trading 1954 on the bid. So we'll see if that works. But my thinking here is if there was anybody who had to sell, they probably did it yesterday. and they're probably done. And that means that there's not going to be much selling pressure going into the weekend. And then you've got Monday, which is probably going to be very light since it's in between the weekend, and Tuesday, which is July 4th. So my thinking is you're not going to see much action. And I can remember many times in the past during this market where I'll have a big day on the short side, but we're getting to a holiday weekend or something. So you think that, oh, it's going to blow apart because everybody wants to get out of the way ahead of the weekend or the holiday. But the bottom line, excuse me, is that they've already gotten out of the way. So there's no selling pressure. Everything drifts higher. So what they do today is they open it up, Dow's up over 100, they bring it in, Dow goes up to plus 38 or something like that. The NASDAQ turns red. Everybody wants to get bearish because all the shorts now know that the market's going lower, so they obviously want to be heavy short, which is probably not the time to be, given that the NASDAQ is sitting at the bottom of a range. And what they do is they fake everybody out, and by the close they turn it back to the upside, and we're probably going to be near the highs by the bell. That's my call. We'll see what happens. Right now we're up 80, so, and for those of you who follow me on Twitter, I think when the market was up about 40 on the Dow, I actually put that out that that's what I thought was going to happen. And that, you know, because it's just a kind of a pattern. They just want to screw you up. And if you're on top of it in a contrarian sort of way and you catch the break off the peak, it's very profitable. But if you start jumping on the short side and thinking you're going to get heavy short, make a bunch of money, as I'm sure a lot of people thought was going to happen after this break, and then you get this jack in your face just for one day, but it's enough to, you know, run you through about 4 pairs of underwear and cause you to lose money if you're trying to get heavy short here. No, you want to get short here on the reversal day and catch that move, and then when it breaks hard and everything looks grim and the whole world's freaking out and panicking, then you cover because you get an undercut and rally yesterday and you're back up. And that's one of the reasons why I didn't hold anything short overnight, except for a little bit of First Solar, because I saw the undercut and rally in the NASDAQ even though it had broken below the 50-day line. So you see that? That's very clear cut. So at that point, then you can start looking at some of these patterns and seeing what might be setting up in a sort of a contrarian way. So, you know, I'm looking at the goose, and of course that looks like it's in midair, and it looks like poop. And yeah, 12.5 million shares on a 4 million share float that they had previously now gives you 16.5 million shares, so it's been quadrupled overnight. But the other thing to think about is this. Goose, I think, is a strong brand. They've got decent earnings growth. Don't they, Dr. K? I mean, does that look okay to you?
Let's see. When I looked at it the last time, it looked pretty good. And, you know, it seems like well, the last quarter it was down. But
yeah, but they're turning around, right?
Overall are on the upswing. I mean, for this 2018, it's 95% over 2017.
Okay. So you know, a lot of times if you have a 4 million share float, institutions can't play because there's just not enough stock there for them to get a meaningful position. You raise that to 16.5, that might make the stock more liquid to the point that institutions get more interested. Now, you had a big move here, but now you're in a base. So where would the lows of the base be expected to form? Well, close to the 50 days, one, but if I can get the stock close to this 1943 low of this gap up window, then I may go after it there, which I did this morning, and not a huge position, but enough that if it jacks for me, you know, I can probably buy some sushi for lunch. But this is where I'll check it. And what happens is that you'll never get to the 50-day line because that would be too obvious, right? Your volume seems to be drying up. What's our volume rate on this thing today, Dr. K, relative to yesterday?
We're 45%.
Okay, and yesterday, what was the final tally on the volume?
The final, well, we're much lower than yesterday because yesterday the final tally was 202%. So, you know, in relation to that, we're pretty light today.
Okay. So, let's see. Let me just check something really quickly. Whoops. Yeah, same to you there. I hate that ding sound. Here we go. All right, so let's look at this. So projected volume, you can see, I don't know if you guys can see this, but I'll try and make it bigger. Nope, I don't want that one. Oh, I guess I have to do this. Hold on. Yeah, now you can see it. If you guys look at this, you can see that this is projecting the volume for today. So that's it. So you're drying up down here. So, you know, on a relative basis after the secondary. So that's probably what you want to see. You guys are probably buying this now. It's above 1960. Okay, whatever. But that, you know, this looks grim, but that's kind of normal for a base. And if you look at it, it could be a double bottom base here that it's formed. It's a little steep, but somebody, I think this jack was manipulated, and somebody knew something was happening in terms of a secondary. And so they'll come in, and so this would be the lows of the base. And so I'm interested in buying it here, not, you know, here on a breakout. So. But you can see I'm getting projected volume here, and that's one thing I had them do on this when they redid HES Investor. Something I wanted to be able to see was projected volume, because it gives you a good visual, and I operate on the basis of the visuals. Anyways, where were we? Whoops. Okay, another one that I think is worth looking at. Dr. K, I'd like to get your opinion on this as well. If you see Nutanix, that's you had a nice a gap up here on very heavy volume. So that from here to here, that met the criteria for the 0.75 times the 40-day average true range. And to me, that's a viable gap up. Now, the problem is it runs into, oh, it just turned green on me, or blue. See that? The problem here is that the market runs into trouble as it's pushing higher, so it comes in. But notice this is, I believe, what is a low here? The low there is, what is it?
1934.
1934. Okay. Is that 1934, this low? No,
You're
wait.
talking about which
On
the data?
NTNX, on the gap up day?
That is, oh, that low is 1968.
Okay. So it's holding
It
above
doesn't
that.
down a whole lot.
What's that?
Holding, yeah, it's holding up.
Yeah, so to me, that, you know, it comes in this morning, and I can see the volume rate's not that heavy, so I come in and pick up some shares. And, you know, it's undercutting all these. The market's terrible, right? It's all going to blow up. And so I'm long that one. It's moving for me right now. I'm up on it, so I'm happy. Somebody says, my opinion is merchandise. I'm assuming that's Goose's merchandise is overpriced versus North Face, Patagonia, etc. Well, you know what opinions are worth, right? So we go on the price volume action. Okay, so the other one, I don't know, that sounds cool to me. You know, Goose, I like it because you can come up with all these great stupid puns like, oh, look at that stock getting goosed today. Or they're goosing investors when it goes down. But now here's Appian. This is one on the focus list. I like this. You get, I mean, this was, you had a pocket pivot. We actually pointed this out in a Voodoo report here, and Dr. K and I both liked it enough to put it on the focus list. I think Dr. K was actually pushing for that. But you got a nice undercut of this low here. So we undercut this low here, and then you turned and rallied decisively here. You got a pocket pivot. It pulls into the 10-day line. Volume dries up on a relative basis. It dries up even more yesterday, but you're hanging tight. And not yesterday, but Wednesday. And then yesterday when the market was getting pummeled, what was this guy doing? He was actually up on the day. So... and you're not really getting any selling interest in the stock. So today we get another little pullback down into the 20-day moving average. Guess what? I'm a buyer, and I'm going to use the 20-day or the 10-day as my stop. And this one's on a, as far as shares go, it's relatively liquid. It's 900 and something, I think, is what HTSI shows on this. I don't think you'll get anything. Whoops. 666,000 with trades, but that looks pretty good to me on my HESI charts, and you can see you're getting some blue over here. So I'm going to take a shot at that, and I was impressed with the way that it acted yesterday. Okay, so I take note of that. And again, I'm not ever trying to be bullish or bearish. Okay, just get that whole baloney out of your mind, and stop trying to compare this market to other markets and then develop some sort of a macro view based on that. That's bullshit, okay? Don't get caught up in that. Focus on the setups. Take a contrarian view. Be creative. Be resourceful. Be courageous, okay? Otherwise, go home. Go invest in mutual funds, because I don't think you'll do so well in this market. It's tough. And that's the approach you have to take, I think. So, anyways, strong words from Gilmore, I know, but Dr. K knows that my bark is far, far worse than my bite. Correct, Dr. K?
Well, it's what I call tough love, and I think that some investors are going to need that, especially in this kind of environment.
Yeah, for a fee of $25,000, I'll fly out to your house and slap you silly if you want. That's what's called private access. Anyways, What about Goose goes on TSX exchange? Is currently, would you play it different? I don't know. Who cares whether I'm going to play it different or not? I'm playing it on one basis and one basis only. Right now, it has to hold 1943. That's the low of the rising window. End of story. We'll see what it does after that. I don't know. I don't come up with, if something does this, what am I going to do? I'll wait and see when it happens. Then it becomes, if something does this, I'll do this. But I don't, if it breaks the 50-day line, obviously I'm not even worried about that. I'm insisting that it hold 1943, which is this high over here. So who cares? If it breaks the 50-day line, I would be long gone before that, since that's at 1911, and then I can look at it from there if I want to with a clear head. Okay. But I like the opinion that the stuff is overpriced. There's a lot of people. You can go on Seeking Alpha, and there's a lot of people with a lot of opinions about Goose and how they're overpriced, and they're another Michael Kors. They seem to forget that Michael Kors had a pretty big move after its IPO. It was later on when they kept issuing secondaries and killing every breakout. Remember that one, Dr. K?
Oh, yeah.
It was very frustrating. Anyways, where were we? Let's see. Oh, some other stuff. So the Nutanix, Appian, Goose. How about Momo? Anybody like Momo? I'm looking at Momo here, and what I see are well, first of all, you got a failed breakout. So, of course, it's death, right? It's a late-stage failed base, and that's a short sale setup. Well, in this market, it may be, but it also might just be a giant Louis. He's got a big lower part of his L there, a large appendage, you might call it. And in the process, here's your third pullback, but it's holding above these lows. You've undercut this low at 36.91, and you're back above it. So guess what? I'm long the stock this morning after it did it. Now, you'll also notice that it did it once, twice, three times. Isn't that an old song? Once, twice, three times a lady. Maybe you have to go, you're once, twice, three times a Louis, and you failed the first two times. Although, but on a closing basis, I think both days, yesterday and the day before, you held above this low. So it's still in force. So guess what? It looks terrible. It has violated the 50-day moving average, but it's kind of trundling along these lows. You see all these lows, and these lows extend back to this prior base here. So you've got all these lows in here that could set up undercut and rally moves, all of them. So I'm going to, this one's going to stay on my radar, and we'll see what happens. Maybe it works. Maybe it doesn't. But I'll take a shot here, and what's my stop? Well, 39 or 36.91. End of story. I don't have to think about anything else. I don't have to be worried, concerned, optimistic, pessimistic, whatever emotion you went through. I don't have to worry about any of it. I just look at the setup. I take action, and I feel a lot of times I feel comfortable taking action when the market's in trouble and everybody can see it. Although that didn't work so well on Wednesday, but that's okay, because that's why you use the prior undercut low as your stop, because it keeps risk to a minimum, and then if you get stopped out, you can always come back to it, because believe it or not, you are allowed to buy back stocks that you sold earlier, even on the same day, assuming you have enough buying power and lots of day trading buying power. So that helps in situations like that as well. So, that's the drill there. And those are the four names I'm long right now. Some other things, AAOI's stopped out. Let's see what it's doing now. Yeah, it's kind of floundering about. Another one that kind of catches my eye here is Data, which, if you're looking at this, a nice breakout here, good volume right here as it goes to new highs, and then flips out at the high and then comes in hard. Volume picked up pretty good yesterday in the tech sell-up, but you're holding along these lows. So maybe the 50-day line meets up with it. So that's what I'm watching. Twitter. How about Twitter? Anybody like Twitter out there? Twitter. Twitter actually had a bottom fishing pocket pivot right here. And I think that would be there on the volume. Is that right? Yeah. You moved up in here, and you're along these highs, you run into some overhead. That makes total sense to me. You pull back into the 50-day line, the 10-day line, and the 20-day exponential line, and you hold support. Volume seems to be drawing up today. Is it drawing up today relative to yesterday, Dr. K? Can you tell?
It's minus 33%, and
Yeah.
yesterday it was 7%.
Yeah, so it's drawing up here. So this is probably in a viable range using, say, this is the 200-day line at 1743. You could use that as a reasonably tight stop. It's like 3% lower, maybe less, 2.5. But so that's a setup that you could look at. So the only thing to be aware of is when earnings are coming up, because I think they're coming up in the next month or so. Snap, I was kind of screwing up here. I'm not sure why I think we're in July. We're in June. And that's also why I saw the news on there is no 30th. The new month starts on Saturday, so it's July 31st, a month from tomorrow, that we're going to see the biggest IPO lockup expiration come out, and of course everybody's going to short poor little Snap on that basis. But here's the bottom line here. The bottom line is this. Here's your 1759 low. Guess what? You're trading 1786. You're still above it. So guess what? That undercutting rally, even though it's been back and forth and maybe you've been stopped out and you have to come back and stop down and you have to come back and stop down and you have to come back, I think eventually this turkey goes higher just because the whole world is short it. The short interest has doubled, I think, over the last. What is the short interest right now relative to the prior month, Dr. K? Is it much heavier?
Right now, it's 2.9 was end of May, and then 1.5 mid-May, so it was a double.
Yeah, so the short interest has doubled, and I think all these guys are about to get you-know-what. And so what you've got going on here is you pull in the volumes drawing up. What are we looking at right now on the volume levels?
Snap is at minus 65%.
Yeah, it's a voodoo, baby. So
minus 37, so yeah, we're lighter.
One second, please. I just one-clicked an order for 12,500 shares. Just get started on it. And they just filled me at 1789. Okay. I sort of like that. Let's see, maybe I should have checked the 620, but I'm just thinking, just referencing it from my memory. Yeah, there it is. You just got a buy signal on it, so I'm in it. So, bada bing, bada boom. Here we go. Wish me luck. But, you know, that's set up. And everybody thinks, oh, this is in trouble because of the lockup. Keep dreaming. Goose now 1971. What are you guys all buying it now? You know what, who wants to buy 25,000 shares? I'll sell them to you. Actually, I won't. Sticking to my... And what about Pega? What about it? I don't know. It is hanging down there, so I think here's how you would approach this if you like this. I don't really know the story. I remember the stock from a long time ago. Do you, Dr. K? This is like from a long time ago.
Right, yeah, they do the business management software.
Yeah, so it's cloud stock. Back then, what did we call it? It was something else. But anyways, you've undercut these lows, okay? The only problem is you're not holding them. So you can use those lows if it moves back above that as a trigger. Otherwise, you might lay back, see if you undercut this low, or this low, and that might cause another trigger. So that's what I would do if I was watching. If you understand it well and you know the story, that would be how to approach it using the methods, the OWL methods that we prescribe. Is that right? Did I say that right? Okay. What else? I like this one, BioVeritiv. Pulling into the 20-day line. What's our volume rate on this one, Dr. K?
Minus 49%.
Yeah, so there you're coming right into the top of the... Well, I kind of messed that up. Let me do that again. I'm mouse challenged when it comes to drawing on a screen. But you can see your volume's drying up. You're pulling into the top of the base. Well, you're in a buy position. And maybe, just maybe, biotechs are going to be an area that sees a little more play going forward, but we'll see. Not really holding my breath, but you don't really have to. You just look at the setup, you see it. You can see it got support yesterday during a big market sell-off, okay? So that's constructive, and that's the sort of thing you want to see. Contrarian move, showing some strength, okay? Now, it's hanging tight. Tested the 20-day line this morning. Volume is light. You can take a position and see if it works. And 20 days your stop, 59.14, which is less than a percent away. You keep your risk tight. And that's how I plan, people. And that's what you do. And it doesn't necessarily mean they're going to work, but it does mean that if it doesn't, you're going to be out very quickly. You're not using some stupid 7 to 8% downside stop like an idiot, okay? You're running things much tighter, which I think is what you need to do in this market. So anyways, ELF, not that one again. You know what? That doesn't even hit my radar screen. Is it too thin? Is that the problem? Oh yeah, no, not really. You know, well, I can't say that that's a bad pattern either. I mean, you showed some strength the other day. Did we have a sell-off on Tuesday, or was it Wednesday? Tuesday, right? Yeah.
It was Tuesday.
Pardon me?
Yeah, that's right, Tuesday, and then
Yeah.
again, yeah.
So it ran up. The market was selling off this day, and it ran up. And then the market kind of weighs on it. You pull in on light volume, and yeah, you're back right in here. So that's in a low-risk buy position if you like it. So you guys also maybe get a sense that you can see that there are some stocks that are setting up in the midst of all this. So if I'm looking to go long, I don't think I really want to mess around with the big stock NASDAQ names. It looks to me like they're done. And at best, they're going to need to base and go through earnings. In the short term, I'm looking for the newer stuff. So, you know, Snap is there, Goose is there. Twitter is newer only in the sense that it's been revived. Nutanix is new only in the sense that, well, the first two letters of the company name spell new, which I don't know if that counts, but, you know, it's close enough. And then they're sort of a new situation. They've got an agreement with Google, which I think is big. And their recent Bible, you know, bottom fishing Bible gap up that took some time to set up, but it did. And sometimes you got to be patient and be willing to work these. But you had the failed bottom fishing Bible gap up, but that makes sense because you got a lot of overhead, so sometimes that can happen. There wasn't a lot of short interest here on this one, I think. So when you, in the absence of that, a lot of times you won't get a major move. So I know Snap's starting to move. You guys must all be buying it. Maybe I should get long more of these before I start talking about them, but that would be cheesy, wouldn't it? I'm just working them the way I'm going to work them, so end of story. Let's see. So, you know, this, and I think this could go a lot higher. I could go all the way up into the 30 level. So, yeah, I mean, if the market turns around, if we get into real trouble, then everything's probably off the table. But I think that being open-minded about some of these setups and playing them, they might be just, you know, good for just trades. You don't know, but I'll take them if I can get them. So, and I'm not going to prejudge anything, and I'm not going to get freaked out by the environment. I like Palo Alto Networks, another one. Keep an eye on. Volume is drying up. What's our volume level today, Dr. K? It might be because of the holiday, though. That's the other factor.
Well, that's the thing. Yeah, I mean, we're at minus 60%, and I wouldn't be surprised because
But that's setting up along the 200-day moving average. So if you take it at face value, there it is. And I think this could go higher. You know, there was another hack the other day. That was cited as one of the reasons for the sell-off. Was it yesterday or on Tuesday or whatever? I don't know. They've always got an excuse, but it is what it is. And I think maybe this has a shot at coming back. There's another one that is thinner that I've been watching too. Imperv, it's acting well. Looks like a Head and Shoulders, doesn't it? But it's sitting at the 50-day line. Volume's drying up. Of course, we got the long holiday weekend. And this is why I think they're going to push the market higher into the close. So I think you'll be up over 100 on the Dow. We'll see if I'm right. And a lot of people want to get bearish. What do you make of Trivago's volatile action? I don't know. That's another one of those weird kind of questions. Like, what am I supposed to make of it? It tends to be volatile, but what do we say? We said, you know, look at it along here. As soon as it regains the moving averages here, right on this day, and then I think you had a pocket pivot here, you could be long it. So, but you know, what do you make of it? Well, what do you think causes stocks to be volatile? Well, the market's volatile. That might be one reason. And it's a smaller new IPO, and you break out, and we also know that breakouts don't tend to have sustainability normally, that much at least. So I actually shorted it this day. It was up here near 22. I shorted it. It came down a buck or so. I covered it mainly because it was coming right back on top. So, you know, I don't start thinking I'm going to make tons of money short. I'm just scalping them and hitting them fast. Here goes Nutanix now, 2010 bid. You guys must be buying that too. I notice all my stocks are going up now, except Appian isn't moving. Can you guys start buying Appian, push it up for me? I'd like at least a buck by the close. 5%, thank you. Tempted to take profit in Pod, but unusual strength is curious. Pod. Okay, let's take a look at that. What do you think of that one, Dr. K? Is that the company Oh, we've got another one. There's First Solar at 40. So guess what that means? I'm not hanging out. Cover that baby. I'm gone. Make a few dimes on that. But again, I set my stops. Maybe some of you saw me setting my alerts before the webinar on my screen. I think my screen was showing. But, you know, on that basis, I put an alert at 40. My thinking is if it comes back above 40, I'm going to cover it. And maybe it doesn't go down today. But that's one I'll continue to work. But I could be wrong, you know, so we'll see. Might be making more money on Nutanix. So, pod. Tempted to take profits in pod. Well, how you could handle this, you know, some guys like to use a 10-day line or something, but I don't know what to tell you. Hopefully you bought it down here. If you did, you're doing well. But it's kind of thin. What is it anyway? Insulet Corp. What do they do? Dr. K, you like this one?
They make those insulin infusion systems, you know, for
Oh,
diabetics.
yeah. Okay. I think for type 2. So, because my son Alex is he's a type 1 diabetic. He has a pump. He's actually getting what they call the bionic pancreas thing. So that's coming soon, apparently. Anyways. The unusual strength is curious. I don't know if it's curious. It's just unusual strength, and it's usually a good sign if the market's getting tagged. That's why I'm showing you some of these other names that seem to be acting well in the face of the sell-off over the last couple of days. So if you think the market's going to come out of this, then I think we're going to have to see some new leadership. I like the new, fresher stuff. So here's another one. We looked at this last week, I believe. Alteryx. You like this one, Dr. K, right? And this baby's sitting right there.
Like APPN, same thing. Very interesting business models.
Yeah, so I like, let's see how easy this thing is to buy. I'm just going to buy, do 2,500, there we go, 19, or, oops, what happened there? Oops. Looks like we got them at 52 cents, 1952 on that. I just bought 5,000 shares. I'm just testing it out. We shall see what happens. But that's interesting. So I'm doing pretty well on my long so far. Maybe you guys could push them all up for me some more. But this one I'll buy right here, and this has been on my watch list. I've been watching it all day, actually. And I just noticed, since I brought it up, this is what it looks like on the 620. So it trades a little sparsely. What's the average daily volume on this turkey? I forgot to check that. Maybe it's not even big enough.
It's only about 300,000.
Yeah, cool. So I can come in and buy 50,000, push it up $5. Okay. But it looks like we're getting a 620 buy signal. There's some volume. Oh, that's me. Sorry. Half of that's me. Maybe you guys want to push that up for me? Anyways, but that would be a position to buy it. I like the story. You like the story too, didn't you? Or am I getting this mixed up? Okay.
They help businesses in a way that's quite unique, using their data analytics software. So.
Okay, now in one area that you might see some rotation is oils, and so I actually did a voodoo report on Wednesday when frac was coming right through its 50-day line. It's gone higher. I also pointed out the action I was seeing in SND and kind of detailed some of the things I look for when looking for potential bottoms, and that was namely the fact that here's a weekly chart. Oh, this poor guy, he looks terrible, doesn't he? But what you're noticing here is that I see 1, 2, 3 waves to the downside, and of course if you're seeing other oils bottoming, then you know the group is probably going to move together. So, but it's a new issue. It got above the 10-day line on Wednesday, so I thought that looked viable there, and it's up nearly a buck higher, which is nearly 10%. So hope you're on top of that one. But, you know, again, this is creative sort of stuff, but you know what? It's not new. It's all of this stuff is derived from Richard Wyckoff's techniques, and even Livermore, you know. So I've said this many times, Livermore never talked about Can Slim. He never even talked about companies' earnings 5 quarters up, this, that, and the other thing. He was just looking at price volume action and trading things on that basis. So he did pretty well that way. And he also did not buy breakouts. He bought stocks at inflection points as they turned off the lows. He had the shakeout-plus-three rule, which was actually a bottoming rule for a stock that was in a downtrend. And so there's a lot of stuff that he used that was not O'Neill like. And in fact, in my view, CanSlim is a very limited system. In a good market, it's very effective, right, Dr. K? But it's to me, it's a very limited system and very narrow. And if you're going to survive and prosper in these markets, you need something a little broader. And that's why we have expanded so many things since the first book came out in 2010, and so many new things, even with the pocket pivots, right, Dr. K? We got the 5 days that we look at. We've got, and then we don't even look at strength on a pocket pivot day as something you want to buy. You're looking for the voodoo pullback after the pocket pivot. So there's a lot of ways things have changed, and you have to evolve with them. So I think any system that stays rigid is flawed. If it doesn't have the room or, say, the structure to evolve and shift with the market based on a few underlying principles, then I think it's not likely to adapt. It's more likely to die. Anyways, any thoughts?
Yeah, and CanSlim is, it's a retail product. We've always known that. It's a simplified product, meaning it requires less thought, but that's what appeals to, appeals to the masses. But as I used to say when I would be up on stage with Bill, I would look around the room and say, maybe only a handful of you are actually going to make the system work for yourself over the long run, and here's why. And I went into the details of, first of all, the markets will change on you, and you can't use CanSlim canned. You can't use any system canned. You have to adapt. You have to take that system and adapt it to your own trading. So everyone who trades a system is going to be trading it in their own way, or they better be. If they're using just a canned system, then it's going to fail at some point. Like I've always said, there's no black boxes. Systems have to continue to evolve, because the only thing that doesn't change is change.
What? No, I'm sorry. The only thing that never changes is the present. Everything is always in the present. That's eternity. I was reading that. I'm reading a new Deepak Chopra book, which I think is pretty good. Anyways, I'm also reading David Stockman's new book, which I think is really good. The only problem with reading David Stockman's book, which is called Trumped, The Downfall of America, or something like that, and it's actually not an anti-Trump book. It's actually more anti-Hillary Clinton and liberal policies, statist policies. But that's a good book to give you some underlying idea of what's going on here in terms of the financialization of the American economy by this money printing, which has only served the elites. And it's really helped, okay, the stock market, it's helped the stock market. But as far as I'm concerned, I don't care if we have a bull market or give me a big bear market, I'll make money shorting it. So I'm not dependent on QE to drive the market higher so I make money the way Warren Buffett does. But he does point out that it does benefit, the whole financialization of America has benefited the wealthy and the tech sector, because all these guys like Elon Musk can throw out their money-losing business models and issue stock, and their stock gets snapped up because you have all this liquidity out there that needs to be put to work. And they'll buy anything that has some sort of thematic basis. And I think in that case, that's why you see a stock like Tesla driving higher. So aside from the fact that it keeps just beating the crap out of these idiot shorts who just keep piling into it.
But we also saw that in the late 90s with the dot-com boom. I mean, there were half-assed companies that had no real business models, but because Greenspan, the whole world was at great fear for the Y2K issue, that all this liquidity flowed into the system by a Greenspan, so that created this bubble. And companies that had no business trading at $80 a share, sometimes doubled from there. So it's a kind of a replay of that, except this is a slower version, more grinding version of what we saw in the late 90s. But the same underlying principles are applying.
See, I want to go through something real quickly here. I got to get this stuff out of the way. go through the list really quickly. We're basically out of time, but I just want to fly through this if I can. I just got to get all this garbage out of the way. I know it's here somewhere. There it is. Let's go to VoSI focus list. So if we look at this, we can flip through these. And you can see applied opto, trying to hold the 50-day line. So maybe on this intraday pullback it's viable. I just don't know if I would try to trade anything longer than today. I don't know. We'll see. If I get some big cushion on some of these names that I bought today, then maybe I'll hold some small positions. But look at Amazon coming into the 50-day line. Arista Networks pulling into the 50-day line. BABA found support at the 20-day line yesterday and is holding tight. Box, we took this one off, and so this one's pretty much garbage, so you can punt that. But Baozun holding along the 20-day line. Quasi Louis, but it's actually forming a little cup with handle, so that's actually hanging in there, okay? I don't know how CC got on there. Circuit City? Chemours. This is an older one, but this is trying to turn off the lows, interestingly enough, but that one's long gone.
That was removed.
Yeah. So, but watch this one, Coherent, Undercut and Rally. That's a possibility. I don't know if some of these old techs, though, that we're leading are going to be the new ones. The Goose is moving. Are you guys all buying it? This AYX is not moving, so obviously you guys aren't buying it. So, thanks. But just for that, you won't be in my will. Facebook pulling into the 50-day line, so that looks like it's just coming into support. JD.com, yeah, it's a little V-shaped, so this pullback makes sense, but it's coming into the 50-day line. The one thing I would say here is, with all these stocks trading down at support, the last thing you want to be doing is shorting them, okay? And I can see that, you know, it's not all that tricky. Momo, I already talked about it. I think that looks fine. Netflix is along these lows, so wouldn't it make sense that it would bounce off of here? It's actually right on top of the prior base as well. So if we look at the weekly chart, you can see that. It's right on top of this structure. So, I mean, you know, chopping around, and then it comes out. I do think eventually someone's going to buy them. I don't know at what price or when, but I do think so. Maybe I'm full of baloney. I mean, but Facebook announced the other day that they're working with Hollywood to produce movies and shows for their platform. And to me, that just validates the whole idea that I've been talking about, that social networking companies are moving towards become media entertainment platforms. Twitter's done that. We talked about that last week, I think, but they have the new video feature. Anyway, so they're in Netflix. Now, notice Now is just pulling into the 20-day line. And it's choppy, but, you know, they won't look pretty when they pull in. NVIDIA, maybe it's coming in to beat the 50-day line. It's going to undercut this low. Snap, we talked about that. Moving higher. Looks like it's heading back above 18 by the close. Square, just hanging in there. Not really anything going on there. It's in a base. So not acting bad. Trivago breaks out. I think, you know, watch it coming in 20-day. It'll be, or not the 20-day, the 10-day at 2052. It'll be a little volatile. Here comes Tesla. You know, it's probably going to base. Everybody wants to see what the next earnings are like. Or I think Sunday, Elon Musk is going to talk about when they're going to start producing the Model 3. Is that right? Or selling it? I forget. Here's TTD, which is in a base. Maybe it tests the 50-day line. Viva is another one that we took off the list. It's trying to hold along the 50-day line. But, you know, it's had a pretty nice move, so it probably needs to build a base. Maybe it sets up again. So you can see some of these probably need more time. You can see some that may have been setting up, like Momo. Looks like it's been spending time setting up and it's ready to go. Maybe not. I don't know. We'll see. But it is in a low-risk entry position using 36.91 as your stop, because that's the undercut and rally point. At least the current one, okay? You could easily, if something happens, you could easily move lower and undercut any of these lows, okay? But so far you've undercut this low and you're rallying above it, so it's actionable on that basis. You need no other reason, and you just kind of, you know, take the position and put a stop on it and stick to it. If it doesn't work, then you're out, and then you're willing to come back to it, however, if it comes back above the prior low that you're using at that point in time. So you got to stay flexible. Like I said, you got to be opportunistic, you have to be creative, you have to be courageous, resourceful, and you have to think like an algo and think a little more contrarian. That's the whole essence of the ugly duckling, which is another component of what we now call the OWL methodology, just because we're trying to box it. So soon we'll be producing little cute little owl dolls that we'll be selling. And they'll actually be they'll have speakers on them, and they will utter phrases that that I like to use during webinars, like they'll call you moron, for example. That's one. Or that's an incredibly stupid question. Anyways, that's all I've got for now, you guys. I hope it's been helpful in giving you some idea as to how you might be able to approach this market, which is tricky. But you know, I don't know if we're going into a big correction or not. All I know is what I see, and I make money on the short side, make money on the long side, depending on what I see. But what I notice is that as long as I avoid getting locked into a bullish or a bearish point of view, and I stay fluid, and I just look at things as they are. In other words, the old Taoist ethic or ideal of the uncarved block. You're just a blank slate, a blank page. You know, there's all sorts of great metaphors for that. But you just got nothing. You know, you're open to whatever happens. So, anyways, you got anything else, Dr. K, before we sign off?
I think we're good. Yeah, just you got to maintain your fluid approach. One's fluid approach. That's really the central theme to the way the markets have been trading.
Yeah, and stay disciplined. You know, set your stops and stick to them. Like, I'll give you an example right now. You just saw it in real time. First Solar. I was short that one this morning. Came in. I set a trailing stop at 40. You guys saw the alert go off. I covered the position. You probably heard me do that when I did it, and it's now 40.13 bid and moving higher. But I'm out of the way. It didn't work out as I thought it would, and I operate on that basis. End of story. I don't need to think about anything else. I don't need to freak out. I don't need to hope, worry, get concerned, whatever. You just see what you see and you act on it. If it doesn't work, then you act on that as well, and you keep your risk to a minimum. And we have many ways to do that. So long live the owl. That's all I have to say. Anyways, thanks for showing up, you guys. Have a great long, I bet you nothing happens on Monday, so it's going to be like a long weekend. But have a great 4th of July for those of you in the U.S. And if you're not, if you're in Europe, you know, find some fireworks and blow them off in our honor. We'll appreciate it. So we'll catch you guys next week. Take care.
Take care, everyone.